if you're young, the single best risk reward is crypto because it's the only market that goes up 10, 20, 50x, while the stock market may double, may go up 200% over the next 5 years. But crypto market does a lot more. So if your aim is to take risks to accumulate wealth, then crypto. I prefer crypto as a bet because I think it has a better risk reward than other markets. But you have to suffer these drawdowns. And, a lot of crypto is down 60, 65%. But if you're less risk seeking, you might just want to buy equities. If you're slightly more risk seeking in equities, you might want to buy technology stocks because technology is not going away. I mean, the rise of everything from AI to robotics to EV to space travel to everything is all happening at the same time. We've got this huge inflection point. So clearly that's going to be something that's probably going to generate a lot of profits over time. So I think it depends where you want to be on the risk curve. Some people like physical things. So they like to own stuff like oil companies because there's not enough oil being produced currently for world demand. So maybe over the next 2 or 3 years that does well. But those stocks tend to be mean reverting, i.e., they kind of just go in cycles. They're not the buy and hold that technology can be or crypto can be. So I prefer technology and crypto overall.
Hello and welcome to Money Talks. In today's video, former Goldman Sachs executive and CEO of Real Vision, Raoul updates about macro investing, current market structure, and whether we should invest in crypto or stocks. Raoul also talks about the key strategies to follow when the economy is on the brink of a recession. Make sure to stick around till the end of this video where Raoul reveals why he is betting big on cryptocurrencies and how Bitcoin's price can go to $1 million according to his thesis.
So generally, he who has cash in a recession is king, because you want to be ready when nobody else is. When everybody's being forced to throw all their trades out and stop themselves out from losing money, you want to be able to buy. So you kind of want to have cash ready, and then you want to see what the economy does, and then start to see, hey, are bond yields coming down? Are the Federal Reserve going to stop raising rates? Those are kind of signals that the future economy in a year's time is not likely to be as bad as what we're seeing coming in the next 3 to 6 months. And it's that transition that becomes very interesting for investors. So, basically, if you're young, you should be risk seeking. If you're old, you should be risk avoiding. It's as simple as that. So if you are young, you should be looking at, okay, how do I take advantage of the sell-off in crypto and the sell-off in stock markets and technology stocks, because those are the things that will drive returns over the next 10 or 20 years. But if you're older and you're retiring, you want to stay in cash for longer. You don't want to take as much risk because you don't have an income. So your grandparents don't have an income anymore. So it's just their pension. So they need to be careful, very careful with their pension. Their nest egg has to be protected at all costs.
Cryptocurrencies were higher on Monday after recovering from a sharp drop in the previous week. Bitcoin rose 1.5% to $19,555, while Ether traded 2.4% higher at $1,328.
The hard thing about the crypto ecosystem is there is so much happening all at the same time. I mean, they've just raised $60 billion in venture capital and everybody's building out projects, whether it's lending markets, financial markets on DeFi, whether it's putting traditional financial markets onto blockchain rails, whether it's putting real estate onto blockchain, whether it's building, doing really interesting things with NFTs, such as ticketing. So we're seeing Ticketmaster has issued 10 million NFTs, the largest NFT issuer in the world. That's going on. We've seen Solana building a phone which integrates all Web3 in your wallets. You've seen, I mean, there's literally almost too much to keep on top of. So, how do you pass through all of that excessive information? You start looking, okay, what are the main chains that the activity takes place on? And the main place is Ethereum, and then places like Solana, Avalanche, Polkadot, and a few others. So that's how you kind of filter down. You see all of this stuff going on. You're like, oh, this is overwhelming. But then the great thing is what platforms they're being built on. and then we can invest in the underlying platforms and protocols.
It had been another tough week for the stock market until the CPI, so Thursday's rebound will likely trigger unwinding of the recent risk-off sentiment, which could have a positive effect on the price of Bitcoin.
Today, I mean, 100% of my liquid net worth, so all of my savings that I don't need to cover my bills, is in crypto. And I've been adding because we're at that point where the economic inflection point is going to change, and that tends to be quite good for crypto. So I don't expect everybody to do that, because liquid net worth is different to entire net worth. You know, I've got houses that I don't have mortgages on. I have an income. So the amount of risk I'm taking is actually not as big as it sounds. And first time around 2013, it was significantly less because it was riskier. We didn't know, was this technology going to survive? Was it going to be banned? All of the questions that have now mainly been resolved, we didn't know that back then. It's like, here's a bet. I think I wrote the first ever macro strategy piece on Bitcoin in 2013. And I said, it was $200 at the time. I said, listen, if we value it like gold, it could be worth $1 million. So let's assume I'm an idiot and discount myself by 90%, still worth 100 grand. And therefore at $200 with the upside, you could lose all your money, but the upside was 100,000. I'm like, this is the best risk reward I've ever seen in my entire life, and the best one any of us will ever be given. And that actually proved out to be the case.
If the price recovers the $20,000 psychological level with a substantial trading volume in the next few days, Bitcoin could test $23,000 next week.
So if you think about it, what is macroeconomic investing? It's using the economy to understand the direction, the future direction of assets. Why does that happen? Well, simply, if the economy is booming, people have more money to spend, and it tends to be positive for assets. And if the economy is slowing down or negative, then you tend to find that asset prices don't do as well. Kind of makes sense. Some assets work the opposite way around generally. So usually when things are slow, bonds do very well, but equities do badly, for example. I use the Institute of Supply Managers survey, the ISM survey, which is a monthly survey that basically tracks GDP, so economic growth. And it shows you that as soon as you make these things year on year, they look identical to the economic cycle. And that's the kind of big unlock, is realizing the economic cycle drives all asset prices. If you know where that's going, you can kind of make forecasts about asset prices.
Despite a recent divergence in volatility, activity in Bitcoin and Ether trading remain closely tied to that of risk assets more broadly. While October is typically a strong month for crypto trading, crypto has never been in such a strongly macro-driven bear market, and it remains to be seen how prices will fare by the end of the month.
Right, all we're trying to do is get probabilities in our favor to try and roughly assess. But here's what's simple. Is if you look at a chart of the ISM over the last 50 years, it goes up and down in cycles. The economic cycle, we all hear that term. What it means is kind of, you know, that if it's rolling over, it's likely to go all the way to recession. It doesn't always happen, but your probabilities are high. And once you're in recession, it tends to start picking up again, and that gives you the green light to maybe buy some of these things. So in a very simple terms, you're looking, the 50 line in the ISM is roughly where it goes to contraction or expansion. If it's coming down and going through 50, you start to worry about recession. So currently, while we're doing this, I think the ISM is somewhere around 52 and on its way down. So we're starting to think, oh, there's probably a recession coming. And when it comes up through 50, you're kind of being given the green light.
Hovering around yearly lows in trade volumes, Bitcoin and Ether are crying out for the next crypto-specific catalyst that will kickstart another bull run and a decoupling from equities. So, do you agree with Raoul Pal's approach to betting big in cryptocurrencies? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.